The Relative Strength Index is a classic technical indicator that is applied for the identification of overbought and oversold states of the market. In this video, we will discuss the situations when RSI indicator will lie to you. We will go through the instances when this indicator should not be relied on, and I will show you the best trading strategy to apply RSI in a trending market. Traders, please don't forget to like this video, subscribe to my YouTube channel, and let's start. While RSI looks very simple to use, there's one important element that many traders forget about. RSI is the lagging indicator. It means that it analyzes and reacts to the past price movements, and it does not predict the future ones. This inherent lag may sometimes mislead traders, especially when the markets are volatile or trade in a strong bullish or bearish trend. Relative Strength Index analyzes the price movements over a specific period of time and displays the score between 0 and 100. It is commonly believed that RSI below 30 indicates the oversold condition of the market, while RSI above 70 is the overbought condition. By itself, the overbought and oversold conditions give very poor signals, simply because the market may remain in the states for a very substantial period of time. Have a look at the price action on pound Swiss pair on a daily. Here was the exact moment when the RSI indicator showed the oversold condition. However, you can see that the pair dropped 150 pips lower before the reversal initiated. So as the extra confirmation, traders prefer to rely on divergence, the situation when RSI indicator and the price action move in the opposite direction. Take a look at the price action on WTI crude oil. You can see that oil was trading in a strong bullish trend, and here we see the sequence of two higher highs. Traders, learn how to trade in my premium group. Get the access to my daily live streams with live trading and analysis. Get my ebook and video course explaining to you my trading strategy. For more info, check my website. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. Analyzing RSI, we can see that instead of setting the consequent higher highs, the RSI set the lower high. That is a perfect example of a divergence, and you can see that after that we saw a strong bearish reversal. However, only few knows that even the divergence will provide the accurate signals in very particular instances. When you identify the RSI divergence, make sure that it happened after a test of an important historical key level. Take a look at dollar CAD pair. Here we have one more example of a divergence. You can see that here dollar CAD set two consequent higher highs, and RSI indicator shows equal highs. So that is the divergence, and we should anticipate a bearish movement. However, instead the pair went higher and the divergence gave a false signal. It happened because if we analyze the historical structures, we can spot that our historical resistance was higher and the price didn't manage to reach that structure. For that reason, the divergence here was unreliable signal. However, after a test of structure, we got one more divergence. You can see that again we got two higher highs here, and RSI shows the lower high. Historical structures will increase the probability of the market reversal after the RSI divergence, and this time the divergence gave a very strong bearish signal. There are much better situations when RSI divergence can be applied, but we will discuss that later on. For now, the main conclusion is that the RSI divergence beyond key levels is a not reliable trading signal. But there's one particular case when RSI divergence will give the most unreliable trading signal. In very rare situations, the market may trade in a strong bullish trend in the uncharted territory where there are no historical key levels. I guess you saw this crazy bullish rally on gold. At the moment, we are trading in the uncharted territory. There are no historical key structures, and the market constantly keeps setting new all-time highs. You can see that analyzing the price action, we got two higher highs right here, and analyzing the RSI, we got the lower high. It was a perfect example of the divergence. In such situations, RSI divergence will constantly lie, making the retail traders opening the short positions and constantly losing their money. However, instead of reversing, you can see that the market went much higher, simply because in a strong bullish trend when the market is trading in the no man's land, the divergence gives a very bad signal. What traders do incorrectly in such a strong bullish market, they look for a bearish reversal signal with RSI. Only few knows, however, that while RSI is the reversal counter trend indicator, it can also be applied for trend following trading. When you see that the market is trading in a strong bullish trend, the best strategy to apply is the trend following strategy. Wait for a pullback to a key horizontal support, and from that support, wait for a confirmation to buy. You can see that here on a daily, gold recently violated the level of a previous all-time high. That structure was a very important resistance, and after the breakout, it should have turned into support. That support can provide a very safe point for you to buy, and your task is to wait for the test of that support and then to wait for a confirmation on an hourly time frame. Your confirmation with RSI will be the RSI divergence on an hourly time frame after the test of key structure. You can see that while the price action here was setting the consequent lower lows, the RSI shows the higher low. That is the perfect example of the divergence and the signal for you to buy. And then after some time, a strong bullish rally followed. RSI indicator is a very powerful tool that many traders apply incorrectly. When the market is trading in a strong trend, that indicator can be applied for following the trend, not going against that. I hope that the cases that I described will help you to not lose money and maximize your gains trading with relative strength index. Let me know, traders, in the comment section if you have any questions. Also, traders, if you want to learn how to trade, do not forget to check my premium group, the link in the description below, and traders, do not forget to watch my other videos.